2026 is a defining year for UK SMEs. Gross lending to SMEs climbed to £68 billion during 2025, up 9% from 2024. But here's the catch. More than two-thirds of that lending, 68%, now comes from challenger and specialist banks, not the high street. Traditional banks are pulling back. They've retreated from smaller businesses, leaving a gap that alternative lenders are filling fast. This isn't a market to be confused by. It's a market to understand. We're Bridge Funder London. We help SMEs across the UK find the right finance, fast, flexible, and straight-talking. In this video, we'll break down the challenges, the opportunities, and how to get the funding you need to grow. Let's start with the challenges, because if you don't understand them, you can't plan for them. First, high street banks are retreating. Lending from UK-regulated banks to SME property investment businesses fell by 14% over the last 5 years. Second, access to finance is a barrier. A staggering 81% of SMEs missed business opportunities last year due to a lack of funding. Third, confidence is fragile. SME confidence has fallen to just 37.4 out of 100. Only 16% of firms expect to grow this year, while nearly 30% believe they will shrink, sell, or close. Fourth, cash flow is a killer. Most SMEs report no improvement in key indicators like investment and cash flow. The picture is clear. SMEs are under pressure. But those who adapt, who find the right funding, and who navigate the new lending landscape, they're the ones who will thrive. Now for the good news. Alternative lending is booming. Challenger and specialist banks now provide the majority of SME lending, giving businesses more choice and greater access. Embedded finance is transforming the market. Almost half of SMEs already use embedded finance services integrated directly into their business software. Startups are thriving. 314,000 new business startups launched in 2025, up 1% on the previous year. Funding auctions are expanding. From digital lenders and marketplaces to community shares and impact investors, SMEs have more funding options than ever before. SME lending is growing. Gross lending to SMEs rose 16% year-on-year in the first quarter of 2026, reaching £5.3 billion, the highest quarterly total since the pandemic lending schemes ended. The business owners who adapt, who embrace new funding options, and who get the right advice, they're the ones who will thrive. If you're an SME owner looking for funding in 2026, here's what lenders need to see. Business age and profit. How long have you been trading? Asset details and cost. What are you funding? Funding amount and term. How much and for how long? Your business plan. What's your growth strategy? Your cash flow? Can you afford the repayments? Your credit profile. Any adverse credit? For invoice finance, debtor book value. How much are your invoices worth? And debtor quality. Are your clients creditworthy? For asset finance, asset make, model, and registration, and cost including VAT. The biggest mistake? Not checking debtor quality. Lenders only advance against creditworthy invoices. If your clients have a history of late payment, it'll be a problem. The SME finance market in 2026 is complex, but it's full of opportunity for those who adapt. Whether you're a small business looking to grow, a startup needing working capital, or an established company looking to expand, we're here to help. Visit bridgefunderlondon.co.uk, fill in the 60-second form, and we'll get back to you with an honest answer. If we can help, we will. If we can't, we'll tell you straight. Thanks for watching. If you found this useful, hit subscribe. We'll be putting out more videos on what's actually happening in the market and how to stay ahead of the curve.